Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Monday, the 4th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, investors fear pre-election giveaways by the UK's Chancellor Jeremy Hunt could force the Bank of England to slow rate cuts.
China prepares to announce its latest growth target as the country's economic challenges mount.
And we take a closer look at the small lender which helped to fuel a giant property bubble in Germany.
Let's start with a roundup of our top stories.
One of the UK's top retail CEOs says tax cuts in this week's budget would be irresponsible. AO World founder John Roberts told Bloomberg he expects the government to spray around a load of unaffordable tax cuts to try to win votes. The Chancellor Jeremy Hunt says that isn't the plan.
I do think in the long run we need to move back to being a lower taxed, more lightly regulated economy. But it would be deeply unconservative to cut taxes in a way that increased borrowing, wasn't fully funded.
But Hunt's words have people speculating any fiscal moves are either minimal or factor in large public spending cuts to pay for them. The Treasury has also announced a £360 million package to fund manufacturing investment ahead of the budget. The Chancellor says he intends to make the UK a world leader in manufacturing.
What I've learned as Chancellor is you can't have a massive impact on, 1 month's GDP figures or another month's inflation figures. But you can make profound changes that improve the ability of our economy to grow.
Hunt hasn't specified how much of the £360 million will come from the government and how much from companies.
The news comes as investors in the UK bond market are carefully watching the budget for any signs of reckless spending. Chancellor Hunt's statement is going to be a signal to investors about Britain's direction this year. Bloomberg's James Woolcock has more.
Prudence or popularity? That's the question many in the bond market think Hunt faces. Some expect very limited spending, given fear of even the echo of a Liz Truss-style mini-budget. Other traders are watching for electioneering giveaways that could add to inflation and push back the Bank of England's interest rate cuts. Any fiscal stimulus risks adding to an already poor backdrop for UK bonds. The yield on 2-year government gilts has risen more than 60 basis points since the start of the year, the most in the developed world. In London, James Woolcock, Bloomberg Radio.
The UK government is also planning to lower the threshold to qualify as an angel investor, reversing a change made earlier this year. The Treasury says the income and net asset criteria for high net worth and sophisticated investors will be reset at £100,000 and £250,000. That's after the thresholds were raised at the end of January, prompting criticism from investors. At the time, entrepreneur and angel investor Grace Beverley told Bloomberg Radio the increase would hinder female-led businesses.
I would love to see this legislation reviewed. To me, it's unbelievable that this would not have flagged up as something that would hugely disproportionately affect women and disadvantaged founders, and therefore absolutely should not go ahead, or there should be things in place to enable for there to be ways around this.
That's founder and investor Grace Beverley speaking to Bloomberg Radio at the end of January. Further legislative changes to expand the pool of eligible investors are also expected.
Now let's turn our attention to China, which will unveil its 2024 growth target and strategy to support the economy at the country's highest profile political gathering this week. Premier Li Qiang will deliver the government work report for the first time at the National People's Congress on Tuesday. Bloomberg's Stephen Engel says that Chinese citizens are looking for indications that leaders will work to improve economic conditions.
Everyone says clearly the economy is not doing well. They also want clear signs from the government that they're going to be doing something to help their situations. Obviously, at the core of that is property. The property market has absolutely hurt people's paper wealth, their household wealth, obviously, and their confidence. There's a worry that there's policy disconnect, if you will.
Bloomberg's chief North Asia correspondent Stephen Engel speaking there. The growth target is expected to remain the same as last year at around 5%, but it will be harder for China to achieve it due to a higher base of comparison. Investors will be following the meeting in Beijing closely for signs of further government economic stimulus.
Oil prices are trading close to their highest level so far this year after OPEC Plus extended its production cuts. The organisation will now maintain their 2 million barrel a day reduction until the end of June. Brent and WTI futures rose by 2% after the news was announced on Friday. Oil prices have been climbing slowly so far this year, driven by tensions in the Middle East and an uncertain demand outlook.
US Vice President Kamala Harris is calling for a temporary ceasefire between Israel and Hamas. The comments come as the Biden administration faces increasing political pressure to end fighting between the two sides. Here's what Kamala Harris had to say during a speech in Selma in Alabama.
Given the immense scale of suffering in Gaza, there must be an immediate ceasefire. This will get the hostages out and get a significant amount of aid in.
Kamala Harris speaking after US officials revealed that Israel has essentially agreed to a 6-week ceasefire if Hamas hands over hostages categorised as vulnerable. However, reports suggest that the militant group is currently refusing to say which hostages are still alive. Harris is due to meet Israel's Benny Gantz, a member of Prime Minister Benjamin Netanyahu's war cabinet, at the White House later today. Now, in just a moment, we'll get more on the budget, which will be one of the flagship events, of course, of this week in economic terms. Jeremy Hunt speaking on Wednesday. Thursday, you get the ECB meeting. We'll be discussing that, though, with our UK correspondent, Lizzie Burden. Having said that, have you followed this other story that caught my eye? It's on the Bloomberg terminal this morning. The Crooked House saga. Do you know of this?
The pub that wasn't, essentially.
Yes. This fantastic pub in the Midlands, in just outside of Dudley, basically. 260-year-old pub suffered a fire and then was suspiciously bulldozed by the owners without permission from the council. There has been months of uproar about this, how to rebuild it. Apparently it's going to cost about £1 million, if not more, to rebuild what was a very small building. But it's caused this sort of huge uproar, and it's brought focus on actually the huge number of pubs that, if they do suffer damage or are destroyed, that they have to be rebuilt. They're considered very iconic.
Yeah, buildings that are subject to preservation orders, and essentially if they are demolished in a way that is not in line with regulations or altered, this is the orders that are being given to their owners. And City Lab's Fergus O'Sullivan has been writing about some of the examples of this. The Crooked House, of course, is one that is a particular case, and this investigation still ongoing about that. But there's the Carlton Tavern in North London, the Punch Bowl Inn in Lancashire as well, ordered to reconstruct it essentially in the style of what was a crumbling building to begin with.
Yes,
and then they have to
hundreds of years
recreate
old.
it.
Very, very difficult. And it would sort of seem quite strange when we have such a lack of sort of affordable housing and the difficulties of building at the UK that you would spend so much money doing this. But I think it's kind of notionally, it's sort of part of the fabric of communities, and these buildings are so loved that actually the punishment for sort of maybe tearing them down, if that is what happens, is quite severe. But anyway, it's a really nice piece. It's on the Bloomberg terminal this morning from Fergus O'Sullivan.
Well, let's turn to the political week ahead of us in the UK. Jeremy Hunt preparing to present his budget on Wednesday, facing pressure to deliver tax cuts that could provide a timely electoral boost for the struggling Conservative Party. But the fragile state of the UK's public finances also presenting formidable obstacles for the Treasury. Joining us now to discuss, Bloomberg's UK correspondent, Lizzie Burden. So, Lizzie, Jeremy Hunt says that he'll be prudent and responsible, but it appears the plan is either to cut income tax or national insurance.
Yeah, this is a major moment in terms of shaping the UK electoral campaign. It could be the Chancellor Jeremy Hunt's last opportunity to woo voters, because there might not be time for an autumn statement before an election. And over the weekend, he was trying to row back expectations from January, when he promised that tax cuts would spark a Lawson boom. You might remember the Mail on Sunday cover. Now, as you say, his emphasis is to be prudent and responsible. So a side eye to the Tory backbenchers now that the economy is in recession, now that he perhaps has less headroom than expected, and a plea to the bond market to have fake confidence in his plans. He did hint at giveaways. He talked about being a lower taxed, more lightly regulated economy. And as you say, there's speculation about whether he's going to extend the cut to national insurance or knock 2p off income tax. it's thought he can't afford to do both. And reportedly, it's been a source of conflict between the Prime Minister and the Chancellor because of Hunt's fears of the inflationary impact of a cut to income tax. But you have to ask how much electoral gain there is to be had from cutting these taxes. The autumn statement's personal and business tax cuts barely budged the polls, perhaps unsurprisingly, because people still feel poorer because the tax take overall has still increased.
OK. What about other policies? The idea potentially of scrapping non-domiciled tax status. I mean, this has also been controversial because previously, still is, a Labour policy.
Yeah, to raise money for the other tax cuts, Hunt's going to have to reach down the back of the sofa and find money from lots of corners. So, for example, he could abolish the non-dom tax status. It allows 70,000 people to avoid paying tax on their overseas earnings. That, as you say, would help him raise more money. It would also help him steal Labour's political clothes and leave them hamstrung for cash because they've said they won't raise the three main rates of income tax, national insurance or VAT. You have to wonder, Caroline, why they didn't just do it in the autumn statement if they're going to do it at all, and how they're still going to keep the non-doms on side. Will they bring back the loophole under a different name? And of course, it's also tricky for Rishi Sunak because in 2022 it emerged that this status was enjoyed by his wife, Akshata Murthy, and she's since, of course, agreed to pay the tax on her overseas earnings.
Meanwhile, Lizzie, we've had this announcement from the Treasury about a £360 million package to boost manufacturing.
Yeah, just the other day on this very programme, Caroline and I spoke to the COO of Make UK, calling on the government to prioritise British manufacturing. Here appears to be the response. It isn't clear how much of the money the government itself is going to front, but the point is to boost growth, which Hunt says will fund spending on, for example, defence down the line, even though that's a demand on the Chancellor at this budget. The sense from his interviews yesterday is that it's going to have to wait.
Yeah, absolutely. And £360 million surely can't be an enormous package for life sciences, automotive and aerospace, you know, in the sum total of things, but very interesting anyway. Lizzie, thank you so much for being with us this morning. That is Bloomberg's UK correspondent Lizzie Burden. You're going to have a very busy week.
We're turning now to a different story we're following this morning. Core State Capital started out as a small real estate investor focused on Germany. Now the firm's on the ropes, and its role and that of other private credits firms at the nexus of German real estate boom turned bust is becoming clearer. Let's get the details from our asset management and credit reporter Laura Benitez, who's been reporting on this morning. Laura, let's start first of all with Core State itself. What is it and what was the lure for investors there?
Hi there. Yes, the Core State started out as a small lender, but that changed over the years, and the firm ended up financing some of the wilder bets on German property. For example, it used mountains of cheap money to fund thinly capitalised developers and allowed them to build these vast real estate empires. And the lure for investors was the very attractive interest rates that Core State pitched. It returned up to around 13% annually at the time, and in a world where interest rates were negative, that was a huge draw for the pension and insurance funds that were looking to juice returns.
Yeah, so what went wrong?
Well, the sudden shift in interest rates upended Core State's model of lending to high-risk projects and left many developments saddled with projects that just couldn't finish and debt loads they just couldn't eventually afford. Another key part of this story is the intricate relationships between the firm and its owners and the real estate projects it financed with the money from outside investors. So, for instance, often the developers whose projects Core State financed were actually owned in part by Core State's largest shareholders, who were essentially betting that they could sell the projects on for huge prices before they were even completed.
So who's lost out here, Laura?
So the pension funds and insurers and the wealthy clients were all drawn to the fund, but they're still waiting for the firm to return assets and to sell assets and to be repaid. At the same time, some of the firm's largest bondholders, which include Fidelity and PIMCO, are sitting on some really steep losses. So, for instance, around 400 million euros of bonds have already been written down to zero. So some very big losses already.
Wow, OK. So what does it mean then for existing investors who are waiting then to be repaid?
I think just generally we're seeing, many real estate firms struggling to refinance their debt and being able to sell assets without taking these really huge impairments. So companies like, for instance, Adler and Cigna have become an emblem of all the excesses fueled by investors' hunt for yield, which has allowed firms like them to kind of continue drawing investors in. But now we're seeing the real come down after that party amid all the, the high interest rates and as values continue to tumble. So it'll be an interesting one to look out for.
Of course, in a week that we're getting an ECB decision, interest rate central to the current broader real estate woes in the market. How does this story fit into that broader narrative, Laura?
Yeah, I think all eyes will be on, how quickly interest rates come down and how quickly, real estate firms can actually continue to sell those assets and the big impairments they might have to face down the line. So I think this year and the next year will be really crucial in terms of how those values might be crystallised and how the losses might be crystallised.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.